Welcome to this week's episode of Your Stock Request for the 20th of February. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have QBE, WAM Capital, Zuno Group, Rural Funds and Mineral Resources. So if you have a request, send it through. Make sure you have signed up to the free newsletter. Make sure you share these videos on social media. If you do enjoy these videos, we'd love to get a review from you on Facebook or Google. And just remember, any advice here, of course, is general only. So with QBE, this is a daily chart. Obviously, if we zoom in, it's had a great run over the last few months. Sort of good volume on the way up, despite all the natural disasters. So I guess that's a good sign for the time being. Shorter term, it's looking pretty extended, so it's made quite a bit of movement in a short period of time. We might get another little consolidation like this, but beyond that, I think there is still a little bit more upside here for QBE. So if we have a look at a monthly chart, so this is obviously going back the last 20 years. I'll just zoom in. What we've had, which we identified in one of our reports mid last year, we've had this sort of falling wedge. So the share price obviously fell after the GFC instead of rebounding like everything else. And then the range started to tighten. And then we've had this sort of push beyond the rising wedge. So generally you end up rallying back to the base of the wedge. So if I zoom in here, here's the wedge, here's the movement. So a little bit more upside. About 10% potentially more upside in the next few months to get to this major resistance level. I mean, as a business, it's been massively disappointing over time, so you may well use that as your target to exit QBE. Okay, WAM Capital. So just looking at a daily chart over the year, obviously it's sort of edging high for now. But even during the year, there's been quite a bit of volatility. We can see there's, the drawdowns are, I guess, fairly large each time it does decide to have a bit of a pullback. And it has underperformed the broader market in the last few years. So if we go to our 5-year weekly chart, we could see that its peak actually occurred in early 2017. I mean, if I was to pull up the ASX 200, we could see that the market's gone up, but WAM, even though it's done well in the past, for the last few years, it's underperformed. And as we can see on this weekly chart, it is coming up to some resistance here. So looking at these levels here that seem to previously be support for the stock, seem to offer some turning points, close to 240. So we're getting pretty close to that now. So it looks like it's going to face a major test pretty soon. Okay, Zuno. So this is the daily chart. Obviously a phenomenal run because of recent events. And yeah, when you see a stock go vertical, I mean, almost like Tesla recently, it's become a bit of a fear of missing out trade. Everyone's trying to scramble in. Obviously, there's a lot of volume there. At some point, it goes a little bit too far and we get a bit of profit taking. So where we've had some pretty good closes, mostly on the highs, making progress here. As we can see in the last 2 days, we've had this big sort of price rejection, and that coincides with a huge spike in volume. And then yesterday it couldn't follow through on the upside. So look, the longer term trend may well still be to the upside, but I think for the moment it just needs to consolidate. So either it consolidates in price, so we get a bit of a pullback down here and then it's ready to go again, or it might just consolidate in time, meaning it just uses up a bit of time, like we saw at the beginning of the year, where it didn't necessarily pull back a great deal compared to where it came from a few months ago, but just needed to use up a bit of time, just sort of process the profit takers before it can get ready to go again. So I think that's what we're going to see here. I don't think there's any rush to jump into it right now. Rural funds. So on the positive note, since that huge drop in August, it has been making higher lows. So it has been slowly making progress, which is a positive, and the daily ranges are back to normal. So we can see that, you know, the size of these candlesticks are sort of back to normally what we'd see. Obviously, after this big event, there was a lot of volatility, you know, huge ranges, very risky, but now it's sort of settled down. So that's a positive. I think obviously as we get back to where it was in August last year, there'll be people wishing to, you know, willing just to get out at those levels because they've had enough being underwater for such a period of time. So natural resistance up at these levels, but for the moment it looks like it's edging up there. And finally, mineral resources. So if I just move to a weekly chart, we can see the downtrend was broken in December. So until then, effectively in a downtrend, we could see that being broken in terms of making a higher high. That's this level here. All right, so it broke that, sort of retested a bit, and now it's on the way back up. So it's been trading pretty well since that breakout. Looks like it should head higher. In terms of an entry point, I don't think it's at the ideal level because that's where the old high is. If you're using this breakout and this support level as your stop, we're right in the middle of it. So the risk reward's not very good as an entry point right here. But as a holder of the stock, you'd be holding on and looking for it to at least retest this old high. Okay, well that's it for this week. If you have a request, send it through and I'll try to include your stock for you.